The next thing I want to talk about is Obamacare. The reason I bring up Obamacare is I don't know how many people on this phone call are going to be, how affected they are by Obamacare and by the credits that they're going to have. But there is a concern that I have that people are going to be snuck up and they're going to have to pay some taxes if they're not careful. So Obamacare is based on, and the credits that a person receives is based on where they fall within the federal poverty level. And you take a look at this, and boy, I bet you didn't realize that a family of 6 that makes $127,000, that's 400% of the federal poverty level, and suddenly they are someone who qualifies as getting credits, and if they're not careful, they might have to square up and pay some tax at the end of the year. So again, this is a chart that shows the federal poverty levels for various people and where their income is at. So what happens here is that you get a credit, a premium assistant credit, that you can either have applied right towards your premium. So you basically have it that the government pays the insurance company, or you can have it that you receive all that credit at the end of the year. Well, most people are opting to have that credit applied right towards the insurance company, because if I don't have to come up with all the money, let's say my insurance policy is costing me $1,000 a month, and with Obamacare I only have to pay $600 a month. Well, why would I want to pay the $1,000? I'll just have that $400 credit, have the government take care of it, and have it go straight to the insurance company. So what happens here is this is how the initial premium assistant credit, how it's calculated based on where a family falls within that federal poverty line. So the credit is going to be based on the lesser of the actual premium paid, or the benchmark premium less the household income times the applicable percentage. Boy, this is going to be some calculating that takes place here. So what is that benchmark premium? Well, that benchmark premium is the second lowest silver plan offering applicable coverage for that individual at the time the taxpayer or the family member enrolls in the qualified health plan with the state marketplace where the individual resides. Now, take that and check that out. That says state marketplace. Remember, not every state chose to be part of the state marketplace. And those situations now are before the Supreme Court, and how the Supreme Court's going to decide it here, I think, in the next few months. But that's how the law is written. So you take the benchmark of the second lowest silver plan in your state, and you compare that to the actual premiums paid, and you get a credit based on the lesser of those two.